Hey, greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for November 13th, 2025. What a day. I mean, I've talked over the last couple of weeks about how big my cash position is. I bought a couple positions last week, which I closed already, mostly in cash. But whoa, which way is this market going to go? Was the last run that we saw on Friday, was that a bull trap? Certainly feels like that right now. Well, for the market on Thursday, market sold the news of the open government. Maybe that shouldn't have been a surprise. But now we're having issues about how much does the lack of economic data impact the markets into the Fed meeting, and frankly, how much will it affect the Fed meeting? Again, Jeffrey Scott, marketmripro at gmail.com. My Google group is Top Down Trader, and my website's Market MRI Pro. Um, if there was ever a time to join Top Down Trader, which by the way is free, it's now because I'm about to go hit two weddings and I'm not allowed to do videos if my wife is in the room at night. So um, with the travel over the next couple of weeks off and on, I'll be doing a lot of just updates at night where I'll take some screenshots and tell you what I think. It's too volatile of a time for me to not make my commentary. So think about joining Top Down Trader if you haven't already. As always, these videos are for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy any stock that I present on this video. Trading in stocks and options should be considered risky, and you should always consult with your financial advisor before taking trades. And I have tools on multiple platforms. We'll soon be releasing my really cool tool set for MetaStock. And we got some big news for the Market MRI Pro app family and add-ons. Hopefully we'll release that over the next couple of days, but it is exciting. And those of you who were early adopters will have the chance to update to the combined product, and we'll talk about that as soon as we are clear to do that. But very, very excited. Again, my Google group's called Top Down Trader. Just go to Google Groups, go to all groups, search for Top Down Trader, and let us know how and how often you want to be contacted. Know your news and earnings. Just imagine if it wasn't this craziness, we would be getting retail sales, PPI, complex, business inventories. We would be digesting the CPI and the jobless claims. And now, when will we get them? How accurate will the data be? Are they going to rush data to us that's incomplete? And then will the Fed have an excuse to push a cut down the road because, hey, um, they don't know if we're going to show higher or lower inflation. And then we also had the White House today talking about how the shutdown, I'll call Congress's shutdown and stay apolitical, could impact 2% off of the GDP. Does it put us into a negative GDP? There is so much moving right now. Hence, staying in cash seems like a good idea. Earnings tonight, not a lot of big movers. Excuse me, certainly nothing to the upside. Looks like Stub was down 20%. WYFI was down 11.9, and AMAT was down 4.3%. I guess those are some big deals. For the earnings on Friday, I actually have a position in Scholar Rock. Um, not as a trading position, really expecting an approval. And once I saw who the new CEO was, knowing their history, is why I bought the stock. So, that's one of the things that you just hold and you just wait. It's sort of a binary thing. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Should we be concerned by a cluster of Hindenburg omens? Old news. I know we showed you this before, and I talked about why clusters make me nervous. Some of the bigger pullbacks have occurred when there have been multiple clusters. Well, or multiple signals. We got another one today on the NYSE. We are in a cluster, and clusters don't end well. And if you look at the average of all of these since 2018, um, a year later, the markets are up most of the time, but over the first 2 weeks, 1 month, 2 months, 3 months, the markets run into some volatility. The leaders, speaking of volatility, cleanly broke and closed well below the 17. The next target is the 50, and a break below the 50 in this index is dead. Why do I have this index? To give us a sense of what the leaders in the market were doing, and these were leaders chosen about a month ago at my live meeting, or not even a month ago, 3 weeks ago at my live meeting. And this is the scary one. I remember going into the last Fed meeting, we thought it was 98% chance that they would cut not only at the last meeting, but again in December. And as everybody's aware, Powell talked down the cut in December. Well, it's sitting at 50-50. I think if they don't cut, the market sell off because people are going to be worried about what does the Fed know about inflation. At the same token, we've got a growing concern about recession. Stagflation is not good for the markets. Now, here is the trend in rate expectations. You could see a month ago, it was 100%. A week ago, it was still 70%. After market on Wednesday, it was still around 63%. And what is it right now? 50-50. The trend keeps going, we don't get a cut. I think that's a significant concern for what happens with the US markets. For more information about how I trade, how I think, my style, to be invited to some of the seminars I do at no cost to Top Down Trader members either, join Top Down Trader and email me with any of your questions at marketmripro@gmail.com. Any issues with the software, coding at marketmripro.com. A couple of you noticed what I noticed over the last couple of days, and that was it looked like the number of stocks in the base universe fell from 38 to 22, 2300. Nothing was broken. It was just the cache wasn't cleared. And if you see that happen again, it's best to exit and restart the program. We think we can fix it from centrally by just doing a refresh centrally. But that's it. Everything's good. Everything's back to working fine. Actually, never was broken. And again, think about the Top Down Trader Group. Go visit our website for more information. From the charts, we can see the big winner on Thursday, no shocker, was volatility with the VXX up over 7%. That's never where the leadership should be. The dollar was next best. It was down 0.28. Bitcoin was down another 3.47%. Now, you've probably looked at the futures. I know I have. And right now, the futures are okay. They're not great. About 40 points up on the Dow and the NASDAQ, 11 on the S&P, and 5 or 6 on the Russell. Gold's up a bit as well. Not much of a bounce considering the amount of destruction we saw today. Spiders were down 1.66, diamonds 1.66, Qs were down over 2, Russell was down close to 3, and you could see that everything closed in the lower part of their range, and Bitcoin closed really at the bottom. No surprise, the number of new lows increased, triple digits on the NASDAQ, and we flipped to a big negative on the NASDAQ for new highs minus new lows at 52 weeks, barely positive on the NYSE. Now, the top line, if there is a line versus the gray, The colored one versus the gray shows you how many sectors were up, industry groups in each of these indexes today, and across the board, much weaker than yesterday. You could also see that only 21% of the S&P 1500 were up, 21 of the NASDAQ, and 23 rather of the NYSE. I guess it's 22 in the S&P 1500. I should wear my glasses. And then if you look at stocks above the mid-range of the Bollinger Band, we're below 50% on all of them. Why is that important? Because that's kind of a bearish stance in the market. If we look at sector performance in the S&P 500, you'd expect defense, and you did. Energy's been up and down, but you saw staples were flat, and the least down group, healthcare, um, followed. So I guess a little bit of a defensive posture, but really everything was down. Everything finished in the lower half of their closing range. If we look at the worst performers, you can see discretionary was down over 2.5%, tech down 2.49, industrials 1.55. If we looked at sectors, excuse me, at themes, lithium, Norway, and oil and gas exploration were it. If we look at what didn't work from a theme perspective, I can kind of predict marijuana, clean tech, blockchain, uranium, fintech, data centers, TAN, metals and mining, semiconductors, robots, gold miners. And all of these were down over 2%, almost 3. Data centers are taking a hit, and these were the leaders in the market. And sometimes it's good to be lucky, and lucky matters. And um, from my perspective, I got a little bit of luck because with options expiration in October, I decided not to roll a bunch of things forward and to raise my cash. And that was because I saw some ugly action in some of the data centers, which they recovered before the sell-off. So I am heavy in cash, and the positions that have any money in them are pretty much protected with puts right now. If we look at the timing model, it deteriorated. You could see we're in a sell across everything on the daily. On the weekly, and then we're going to come back, look at the daily again. We could see we're still, for the most part, holding a buy. We lost the bongo on the Russell, but we're still above the WMA. So I would say that this is an uptrend under great pressure. When do we turn from a uptrend pulling back to a new downtrend? And I'll be watching those bongos, and I'll especially watch the signal. So right now, I'm not going to say we flipped, and I'm not going to say that we're not, that there's no likelihood of going higher. I think there is likelihood of a bounce here, but you have to get more defensive when that daily model has flipped. And we'll look and see if there's any other data that might tell you to be less defensive. I don't think so. I think this is time to play defense. And it really sucks because this is the time of year that we sit back and we wait for it to watch the markets rocket. And it doesn't always happen that way. Still could, but it hasn't yet. If we look at US indexes, let's spend a few minutes on these and see how much damage technically was done. We took out the 17, I can't remember, the white line is the 21 day. And a lot of people, especially at IBD Live, they talk about the 21 exponential, 21 exponential. So I put it on the charts to see if it was that much better than the 17. I won't say it's that much different than the 17 simple. And here you could see the 50, and we're heading to the 50 is my guess. And we'll see if we retest. If we retest the 50 and bounce and move to higher highs, then that's great. We don't have to go down to the 50, but if we do, I sure as heck hope that we hold there. Notice that we have momentum, breakdown, big volume to the downside, and a CPR reversal as well. That's a picture of a market that's going lower. Um, we'll see if it does or it doesn't, but I think you have to be a little bit concerned if you're all in to the long side. And, here's one that may be the canary in the coal mine. Will the Qs hold at the 50 or break down? This going intraday and recovering, I'm fine with that, just as it did here. But we haven't broken the 50 going back since the rally started, and this is back here in April. So I think this is going to be interesting to see and concerning. But right now, we're holding above the 50. Again, the complex of indicators down here have all turned bearish. If we then look at the diamonds, looks better just pulling into the 17, but still a lot of negativity there. And oh yeah, the volume today on the NYSE, um, it was impressive on the NASDAQ. The NYSE was up a little bit. On the NASDAQ, it was up 34% over average. That's big volume day, and that's concerning as well. Diamonds holding up better. Still a lot of red down here, but holding up better still at the 17. And then you have the Russell, which has never retaken the 50. And now you wonder, where does it run down to? This was a one-time high area that we retested here. Is that going to be support? Does it go to the 200? I hope not. But I think we have to see what happens. And if it makes its way down there, we're going to start be talking about downtrends and not pullbacks in an uptrend. Certainly got lower highs. Will we get a lower low? If we look at volatility, you know it's going to be good. And the question is it done? I would say no. Done will look like a candle that this one here, a major reversal. Um, Reversal. I don't think this is done yet. I think it's going higher. And if we look at the US dollar, a lot of countercurrents here. The dollar came down a bit. I mean, it's up off the lows, but when you see where it came from, the dollar's still down in the lower part of its range. If we look at commodities, today was not a great day to hide anywhere. And you'll see when we look at gold and silver, reversal of some of the action in the prior day, down 0.81. So about half of yesterday's move was negated. If we look at silver, which had a bigger move yesterday, we could see today it was down 1.86%. Hasn't broken, still above the 50. Uptrend under pressure, but both gold and silver have been leaders, and we'll have to see where they go. Oil continues to languish. Natural gas appears it's trying to make a run. I don't like this action above price, but considering how bad the market was, natural gas was up 1%. That's worth something. And then if we look at rates, sometimes when the market's bad, the rates go down. They didn't go down today. The 10-year was up 1.13, and the 30-year was up even more, it looks like. Up only 0.95. So higher rates, dollar down a bit, volatility up. Feels Market feels heavy here, feels like it's going lower, but would not be a surprise at all to see a bounce after the massive move that we saw to the downside, 797 points on the Dow, 113 S&P points, the Nasdaq down 538. You will see bounces sometimes after days like that, but a dead cat bounce is not going to tell us that we're out of it. Buckets haven't gotten bearish enough yet. You could see stocks below the Bollinger Bands, 10%, 8% on the Nasdaq. It's high at 14 and it's 13 on the Russell 2000. They can get much worse very quickly, but breadth looks ugly here as well. Speaking of market breadth, you could see the new Hindenburg Omen signal, and these are all on the NYSE, which we talked yesterday. Is this a triple top? It seems kind of close to be saying that, but boy, did we break down. We'll see if we can hold at the 50. The NASDAQ, now we're look the same, sitting just above the 50 as well. Stocks above moving averages turned down on a tough day. New high minus new low, still positive on the NYSE, negative on the NASDAQ. AD lines negative both ways. This is up-down volume. I think that Hindenburg Omen's probably the most telling signal here. If we look at the other market breadth tool, you could see that everything is turned down. This is 13-week new high, new low. These are the moving averages, stocks above. This is the AD line, and this is the RSI. And I like to look at the 13-week new high, new low to get a sense if we're sold enough, and we're not. I got to see this down to zero point 0.1 or less. We're at 0.56. We're at 0.20, getting closer on the composite NASDAQ. We're at 0.25 on the Russell, and we are still 0.42 on the S&P 1500. I think we got more to go, but bounces occur after days like we saw on Thursday, short-term bounces. Where what sectors are working? Materials picking up, as is energy. Tech's not doing well. Discretionary is horrible. Healthcare is still strong, and financials picked up a little bit as well. If we go into the JAS layout, this is not a day I want to find a lot of stocks. One of my favorite patterns right here is a TZA. TZA is breaking out from the 50 on good volume. This is short the Russell 2000, 3x leveraged, and you could see good volume, a CPR turn green, volume breakout momentum from a squeeze. And I can't tell if relative strength is, is turning up or not. Yep, it's turning up as well. So relative strength is turning up as well. All right, I got in trouble for talking too loud. We're getting ready for the trip. But you can see TZ8 broke out. This is one way to play if you think the market goes lower. Um, you'll notice how far below it's the 200, and if you contract it, you'll see um, that it's way off prior prices, and this is just going back to May. And if you throw a monthly chart on, you can see the problem with these things. With all the reverse splits, this is a $1 billion price going back in 2008, which that tells you this thing goes down. And be very careful with the contra ETFs. They are not for investing. They are short-term trading moves. And since the market typically goes higher, these things are not your friend when the market stops going down. Um, Very quickly, I'm not even going to look at the top-down perspective tonight. I think that is, I don't want to give any false ideas about looking at a lot of longs. I did do a quick look on the A pluses and notice we're back to 3,800 stocks or so. The only one was Cisco, and no surprise, Cisco benefited because it had earnings the night before and had a nice beat on earnings and a little beat on revenue. Pays a 2.38% dividend. Don't like how it finished here, but considering how the day did, still finished up. And as you can see here, it has a gap volume and momentum with strong relative strength in OBV. Probably getting close to being extended after a move like that. And considering the market, I'm not sure I'd be chasing that. When I looked at the A plus, we saw a couple of things as well. And rather the A's, this is probably the one that interests me the most, only because when my grandmother died a long time ago, this was the one stock she owned. And Ashland Oil, it's now it's a specialty chemical company and looks like it's ready to break out as well. Big volume. Let's see if they had earnings. And the earnings are a bit away. And let's look over here. And they did have no. Uh, so they've recovered despite the fact that they missed estimates. ASH is a cancer meeting. This isn't a cancer company. So I think I'm going to leave it right there. Be careful. You don't always have to be fully invested. Is it too late to sell things? I don't know. I don't have a crystal ball. Will I play anything to the long side tomorrow? I don't know. We'll see what the market does. But I think anything I take's got to be on the thoughts of being a very short-term trade. And I'll be looking for signs of a reversal to go higher, but we don't have them yet. Trade safe, be careful, join Top Down Trader, and we'll see you soon.